This presentation is intended to help candidates and committees interested in joint fundraising. Should you have any questions after viewing this presentation, please contact the FEC's Information Division for assistance. Joint fundraising occurs when a political committee works with another committee or unregistered organization to raise funds, and the participants agree to split the fundraising expenses as well as the proceeds. Under FEC rules, virtually any type of political committee or organization can participate in joint fundraising, except separate segregated funds, such as corporate, labor, membership, or trade association PACs. Participants may include party committees, party organizations not registered with the FEC, such as local parties, federal candidates, non-federal candidates, non-connected PACs, and certain PACs not registered with the FEC. Let's review the steps for setting up a joint fundraiser by using an example involving a federal candidate and a national party committee. The FEC's joint fundraising rules require the committees to either establish a new political committee or select a participating political committee to act as a joint fundraising representative. That joint fundraising representative is responsible for collecting all proceeds and paying all expenses from the event. In our example, the party and candidate choose to establish a new joint fundraising committee. The new committee must file a Statement of Organization, FEC Form 1. On the form, the committee will identify itself as a joint fundraising representative, list the names of all federal committees participating in the joint fundraising effort, and name the depository institution being used by the Joint Fundraising Committee. Please note that, even if one of the participating committees chose to act as the Joint Fundraising Representative, it would still have to establish a separate account solely for the receipt and disbursement of all joint fundraising proceeds. Participants in the joint fundraiser must amend their own statements of organization to identify the joint fundraising representative. Before conducting the joint fundraiser, all participants must enter into a written agreement that identifies the joint fundraising representative and establishes the allocation formula, the amount or percentage that the participants agree to use for splitting proceeds and expenses. In our example, the party committee and candidate agree to split the expenses and proceeds 50-50. Participants may advance funds to the joint fundraising representative for startup costs. In our example, the National Party Committee and Federal Candidate Committee expect their event to cost $10,000. Since their allocation formula is 50-50, each committee forwards $5,000 to the joint fundraising representative to pay the costs of the event. Solicitations for the joint fundraiser must include special notices, in addition to the required disclaimers. Every solicitation must include the names of all participants, regardless of their status as a registered or unregistered committee, the allocation formula that will be used to distribute contributions, a statement informing contributors that they may designate contributions for a particular participant apart from the formula, and a statement that the allocation formula may change if any contributor makes an excessive contribution to a participating committee. Following the event, the joint fundraising representative divides the proceeds based on the agreed-upon allocation formula. In our example, the joint fundraising event raised $30,000. Based on the allocation formula, each committee would receive $15,000. However, one donor, the XYZ PAC, contributed $1,000 to the candidate earlier in the election cycle. So if its $10,000 contribution to the joint fundraiser were split equally, it would result in an excessive contribution to the federal candidate. So the joint fundraising representative must reallocate the excessive portion of the contribution, $1,000, to the National Party Committee. Based on this adjustment, the National Party Committee will receive $16,000, or 53% of the proceeds, and the federal candidate will receive $14,000 or 47%. Since the allocation of the proceeds has changed, the allocation of expenses must also change. Initially, you'll recall, the National Party Committee and federal candidate each put in $5,000 to cover the cost of the fundraiser. Now the joint fundraising representative must adjust the allocation of expenses so that the party pays 53% and the candidate pays 47%. It turns out the joint fundraising representative incurred some additional expenses that brought the total cost of the fundraiser to $12,000. Dividing that amount 53/47, the national party should pay $6,360 of the total cost and the candidate $5,640. Accounting for the $5,000 both put in prior to the event, the national party owes $1,360 to the joint fundraising representative and the candidate owes $640. Rather than ask for additional transfers from the participating committees, the joint fundraising representative pays the additional expenses out of the gross proceeds, reducing the National Party Committee's net receipts to $14,640 and the federal candidates to $13,460. Like all committees registered with the FEC, the joint fundraising representative and the participating committees have reporting obligations. The joint fundraising representative reports all contributions received and disbursements made, as well as the transfer of net proceeds to the participating committees. Each participating committee is responsible for reporting its share of net proceeds as a transfer in from the joint fundraising representative. The participating committees also itemize, if required, their share of the gross proceeds as contributions from the original donors as a memo entry on Schedule A. Joint fundraising committees with political parties or other non-candidate participants must file their FEC reports using FEC Form 3X. Had the joint fundraiser involved only candidates, the committee would use FEC Form 3 instead. The joint fundraising representative reports all joint fundraising proceeds in the reporting period in which they are received. In our example, XYZ PAC contributed $10,000 to the joint fundraising representative. This contribution is itemized on Schedule A, supporting line 11C, contributions from other political committees. Any other contributions from PACs would also appear on this schedule. Contributions from other sources, such as individuals, would appear on separate Schedules A. For contributions received by the Joint Fundraising Committee, election designation is not required. The Joint Fundraising Representative must also report all disbursements. In this example, the Joint Fundraising Representative reports its initial $10,000 payment for the facility and catering, as well as its subsequent $2,000 payment for the entertainment. Both appear on Schedule B, supporting line 21B, Other Federal Operating Expenditures. Make sure your committee uses a purpose of disbursement that is sufficiently specific and provides a clear reason for the disbursement. The Joint Fundraising Representative must also report the transfer of funds to the participating committees. In this example, the Joint Fundraising Representative reports the transfer on Schedule B, line 22, Transfer to Affiliated Other Party Committee. The net proceeds to the Congressional Campaign Committee were $13,460, and to the National Party Committee were $14,640. The Joint Fundraising Representative must note the date of transfer, amount of transfer, and purpose of disbursement on its next report. Each participating political committee reports its share as a transfer in from the Joint Fundraising Representative. House and Senate candidates on Form 3, presidential candidates on Form 3P, and other committees on Form 3X. The transfers are itemized on Schedule A, supporting line 12. Using the records received from the joint fundraising representative, each participating committee also must itemize its share of gross receipts as contributions from the original donors as a memo entry. In our example, on March 12, 2012, the joint fundraising representative transferred $13,460 to the candidate committee, which is the candidate's share of the net proceeds after the event. Like other donors, XYZ PAC's contribution is itemized as a memo entry. Note that the election cycle to date total reflects XYZ PAC's earlier $1,000 contribution plus the adjusted $4,000 contribution from the joint fundraising event. After paying all the bills, transferring the proceeds, and filing the required reports, a joint fundraising committee may wish to terminate. A committee may terminate at any time provided it no longer intends to make or receive contributions or expenditures, has no outstanding debts or residual funds, and is not involved in an ongoing FEC enforcement matter. When filing the committee's termination report, the treasurer must check the termination report box on line 4 of the summary page of Form 3 or 3X. The termination report must disclose any receipts and disbursements not previously reported, including an accounting of debt retirement and the purposes for which any remaining funds will be used. If everything is in order, the Commission will approve the termination report and notify the committee that it has fulfilled its FEC filing obligations. Until the committee receives notification from the Commission that it has been terminated, it must continue to file reports. Thank you for listening to our presentation today. We hope you learned more about the FEC's rules on joint fundraising. For more information, please refer to the campaign guide for your particular political committee. The Federal Election Commission is committed to helping political committees comply with the federal campaign finance laws. We provide a wealth of compliance information on our website. We maintain a toll-free information line you can call for help without having to identify yourself. We respond promptly to questions sent by email, and we conduct conferences throughout the country, host seminars and roundtable workshops in Washington, D.C., and provide e-learning on our website and via live webinars. We encourage you to make use of these resources and look forward to serving you.